mixed performance when it comes to the consumer stocks. We saw Dangote Sugar, 7-Up Flour Mills, we inch up marginally, while Cadbury, Honeywell Flour, and Dangote Flour lost 3.9%, 3.5%, and 2.2% respectively. Now, analysts say there's fundamental opportunity in that sector. What are your thoughts on this? And of course, what are some of the stocks that we should look out for?
Yes, I mean, the analysts you sort of referred to are quite right. You're seeing a massive expansion in consumer spending at the moment. That's really supporting, the growth in a number of consumer companies, at least the focused ones and those that have, strong management team. So if you look across the board of, companies that we cover, roughly about 11 names, including the big brewers, continue to see pretty strong growth, except with the exception of names like Guinness or PZ, where, either a weaker route to market or, high input costs have, hampered or limited earnings growth. But we're obviously seeing fundamental growth from a resilient consumer. And that would, I think, over the medium to long term, continue to support the growth in consumer companies. And I think there's also a lot of room or headroom for the local guys to improve operating efficiency as well, particularly within admin and operating costs. That also is starting to reflect in earnings performance, and I think that that should also play pretty positively over the medium term. As far as sort of the picks are concerned, we're somewhat underweight on the sector at the moment because they've done relatively well in the last 3 years, as most Nigerian investors and internationals basically moved to safety. But I think that there are a few selected names that are still trading quite cheaply at the moment. UACN and Flour Mills. These companies have relatively strong fundamentals. They're quite locked into the strong consumer story I just highlighted to you, and on a valuation basis, they're still trading quite cheaply. Flour Mills, for example, trades around about 6.7 times its 2013 earnings. UACN, on the other hand, trades around 10 times.
Now, Esili, I want to ask about Cadbury and Guinness. We saw you change their rating. Stanbic IBTC has changed their rating from a buy to a sell. Why exactly is this?
Well, with Guinness, we see sort of a weaker outlook going forward, at least relative to where we were at the start of the year. We'd flagged this sort of potential weakness early in 2012 because volumes were starting to slack, and it didn't seem like management had any remote control over that situation. And our guess is that first of all, there's been some weakness in this route to market, and also there have been challenges with respect to marketing and selling both spirits and beer. So in some ways, the sale of spirits may have cannibalized sale of beer, because we're still seeing pretty strong growth in competitors like Nigerian breweries and international breweries and some of the other smaller players. But I think that with increased spending in Guinness as far as advertising, marketing is concerned, we do expect to see a pickup from the next financial year starting in July. And with respect to Cadbury, Cadbury has done pretty well. It's up about 40% year to date. We made that call, a buy call, in January this year, and we think it's done pretty well. It was about time we reevaluated our recommendation on the stock.
Well, let's look at the cement sector, Esili. We've seen earnings in that sector sort of likely to gain, of course, after increased production capacity has come into the sector on the back of the opening of the Obajana cement plant. Now, what is your outlook for that sector? And of course, I want to talk specifically about Dangote Cement, which is set to list about $40 billion on the London Stock Exchange. What are your thoughts on this stock when it comes, of course, to the valuation? There's some debate with analysts over the valuation of this stock in terms of $40 billion being listed on the stock exchange.
Like the consumer sector, there's still a significant upside to spending or consumption of cement. Just to put in perspective, we consume somewhere around about 90 kg per person in Nigeria. Now, if you compare that to global average of somewhere around 5 to about 600 kg per person, we're significantly below where we should be. And with a lot of the planned infrastructure spend by both federal and state government, I think it's only natural that over the medium to long term, we see, a very relatively strong, growth in the demand for cement, and that's really what's driven the optimism of our analysts. And so it doesn't really come as a surprise to me that you've seen investors react quite positively to Dangote Cement, unveiling his new capacity in Obajana. But coming to the 40 billion, potential 40 billion listing you talked about, I honestly don't know how they came about that number, but there have been some expansions both locally and also in some other African markets, and just maybe those valuations make sense. But I'm not saying that they do, but I think that we definitely would have to do some work here once I guess they come to the market.